So, where is Palantir going? Is it going to make us rich or very broke? Will the stock be at $100 or $5 in a year from now? And what's the market's opinion? And is there any play for us? Hi everyone, how's it going? I hope you had an amazing day and lots of profitable trades in the market. In this video, we're going to talk about Palantir and to see if it's a stock for you. So, as we know, the job market over the past few years has seen a lot of ups and downs. Companies that were once considered safe havens for those seeking employment have been reducing their workforce and sometimes cutting entire corporation departments. And it has been a very traumatizing experience for a lot of us who were concerned by this. The inflation, on the other hand, has also been rapidly increasing and eating away our savings in economies that used to be deflationary. When every assumption is getting blurry, we gotta seize that opportunity to take a step back and to start working on our own financial independence. One key factor to improve that situation is that we gotta find the next growth opportunities of tomorrow and seize the ones that can multiply our capitals, increasing the money available for later investments. Essentially, we need to find the golden goose. And for many, Palantir is exactly what we're looking for. Over the past few years, Palantir became so much more than just another tech stock collecting money in exchange of promises. It's a major company that plays the role of the canary down the coal mine. It has enough clout and mystery around it to arouse the market's curiosity and people's tendency to follow trends. It's a company that people would often see equally as the risk appetite of the market alongside Tesla or Apple. So the fact that Palantir may rise and fall with the tidal waves is a pretty useful tool that can make it a very crucial stock to follow in the markets, especially in the times when we expect volatilities to pick up. In this video, we're going to take a deep dive into Palantir and see whether it deserves to have a place in your portfolio. Before the video continues, I just want to take a moment to thank you for coming to my channel and hope that you can enjoy your stay and to come back for more content. If you like what you see, please consider to like, subscribe, and to check out my channel for playlists of other companies I cover. With that being said, I hope you're going to enjoy my analysis, and let's get started. Unsurprisingly, the market wanted to push Palantir to lower levels, and this time the $21 region has become a lot more obvious to those of us looking for a bottom. So the current consensus is that the sell-off pressure is a combination of many reasons behind it, and that probably includes the recent announcement of Palantir's growth slowdown in the traditional public sector contracts over 2023. Other additional volatilities are also expected as S&P 500 will rebalance in June. Many saw these developments as a sign that not that many great momentums or catalysts are going on, and they might as well just use that opportunity to take the profit out from their current position with the expectation that the price action will first correct and then come back for a better price. The market reacted as a result and is still in the process of correcting the expectation and digesting the news, if you will. The new consensus is that, it's been built, in my opinion, around the fact that the current phase of market sell-off or hesitation is ending, and the eventual recovery back to a bullish trend, not only in the long run, but in the immediate future as well. Because so far, despite the absence of any sort of significant positive catalysts, the drift of summer trading volume, as well as the recent attempts to push Palantir lower, hasn't really seen the stock below $20, which does suggest that the bottom might hold for the time being while looking for any sort of opportunity to consolidate. It's also useful to remember that yes, Palantir is very much a stock made of momentum and large doses of anticipation instead of cash flows and financial results or that kind of considerations. The fact that its actual financial results are decent may not be necessarily enough to support its current valuation, let alone pushing it to even higher levels. Previously, the resistance levels have been identified at $25, for which the stock is still struggling to surpass. With support levels between $20 and $23, though, it does seem like the stock's past history levels provide a bit of choppiness and increasingly stability to the price movements. These levels serve as pretty important markers for investors, indicating potential areas of price reversals or of continuation. The short-term trends for Palantir stock appears to be moving sideways with a slight downward tendency. This trend can be attributed to a decrease in both interest and volume from investors. While the overall trend remains bullish, the weakening momentum suggests a potential shift in the market sentiment. Now, in terms of volume, the stock sees a trading volume that has been around 25 to 35 million shares a day. Now, remember, it used to be around like hundreds of millions of shares, but that's the past. And this data does suggest that yes, the volume along with the market interest has been on a decrease. So Palantir is currently experiencing a moment of questioning while maintaining the bullish trend in the long run. So the short-term price movements do indicate sideways tendencies with a slight downward hint to it, and influenced by the decreasing interest from the investors, as well as, the drift of summer. The stock faces the resistance at around $25 and finds the support in the large support zone between like the $20 and $23 levels. These levels can easily fluctuate as market conditions continue to evolve. Investors gotta be careful when they see like these developments, because these may sometimes send the wrong signal to be too risk averse or way too courageous. So on a fundamental level, or on a more long-term tendency, I would say that Palantir has always gathered a lot of interest from retail investors ever since its initial public offering. If anything, this might be one of the potential weaknesses for Palantir's long-term outlook. The fact that institutional money has yet to own the majority of Palantir shares. So basically what we're looking at here is that this could be a sign that despite its solid business model and a pretty reliable revenue stream, or revenue streams in plural, Palantir may be perceived as too expensive for the money managers. And this, by the way, if anything, I'd like to make a quick tangent here. It kind of says a lot that institutional money doesn't want to come in despite all these catalysts. So, we're going to talk about the weaknesses in a bit, but what does it say about their confidence in this sector as a whole? What about, what does it say about their perception of AI? I believe that money, like the institutionals' vision or view on artificial intelligence, I wouldn't say that it's less bullish, but it might be more skeptical. Like they know that a few companies have seized the momentum and can manage to change the nature of our economy. But that doesn't mean that it's going to be the case for everyone. So going forward, this has to be like one of the assumptions that you have regarding the relevance of Palantir in the years to come. The increasing presence of retail investors kind of explains why Palantir is known to be a very volatile equity. And since its debut in the secondary market, the sentiment has been overwhelmingly reactive, with investors eager to capitalize on all the trends and momentums, including the company's innovative data analytics technologies on the way up, and the wider tech sell-off because of interest rates on the way down. Palantir's journey in the stock market has often been characterized by intermittent periods of bullish enthusiasm, followed by prolonged sell-offs, dipping at one point below the $10 mark. One significant aspect of Palantir's price movement has been the correlation with fundamentals and macroeconomic news cycles. Events like geopolitical uncertainties, supply chain issues for large economies, interest rates decisions, or governmental regulations for narratives like AI, data, and innovation in general may have had significant impacts for the share price and simultaneously been affected by the company's own news regarding the financial performance and guidance pricing from analysts. Now, on the other hand, the relevance of analyzing news, I would say, has been limited. It's often observed that news articles surrounding the company reflects the ongoing price action, or rather tries to justify it, instead of, helping us to predict what the future is going to be, leading to a self-fulfilling prophecy scenario. When the stock is on an upward trajectory, positive news tend to dominate headlines, fueling further investor optimism. But during downturns, the same news agencies are going to spew out negative news that will amplify existing selling pressure, accelerating the downward trend, fueled by fear. This probably goes for most stocks, as you might be imagining. But the news articles may be an interesting way to confirm the trends, like to confirm whether the trend is where you think it's going to go. It doesn't really necessarily tell us if we're in a continuation or a reversal. As things currently stand now, Palantir has been able to maintain the bullish trend in the medium and long run, with diminishing marginal increase and sometimes pullbacks. The stock has shown a lot of resilience in previous years, and the pace of its ascent, even though sometimes slowed down, they never really collapse. Or even when they collapse, the narrative built around it doesn't necessarily just disappears. They may take a lot of backlash from the news articles that you're going to read during that period of time, but it doesn't really mean that fundamentally people are changing their opinion about Palantir, with the assumption that, of course, the sector that it's in remains relevant. Another factor that may influence Palantir's future performance is the status as a large cap stock. In other words, as companies grow larger, they may develop a certain sort of gravitational force around them. In other words, people may, you see what I'm saying? Like, sometimes people may come and people may believe that, because it's a large company, then if I want to play safe, then I'm going to park some of my money in there. And this is, in fact, why I would say that institutional money is kind of important, because institutions are known to park their money in a position for a pretty long period of time, right? They're more patient, they're more consistent, and they have like a better understanding of the timing of things. So large cap status often brings increased institutional interest and a broader investor base, both of which may contribute to further upside potentials. The current bullish outlook, though, is essential to be careful about it. When price targets in the range of $30 to $35 were mentioned, of course, they're plausible given Palantir's growth prospects and the market positioning, but they're not really guaranteed. So, with that being said, when it comes to options, like option contracts, what we're currently seeing is the fact that the prices are pretty split, and so does the demand. We still have like a mostly bullish tendencies, but there's still significant put volumes. And with that being said, the contracts have a significant demand on both sides because the market is kind of uncertain where the next move will be pointing towards. And to be honest, options can be very useful tools for traders. They can provide additional revenue streams for sellers, hedging opportunities against volatilities, as well as increasing the speculative exposure for the buyers. The current options landscape for Palantir kind of shows us that the recommended approach is to play on both sides, calls and puts. Buying calls options may allow investors to benefit from potential upsides in the stock price, while the purchasing put options provides protection against downside risks. That strategy is called a straddle, and it's very advantageous when both options are out of money, as it kind of enables investors to hedge against volatilities when minimizing the premium costs. By employing a straddle strategy with out-of-the-money options, investors can position themselves to profit regardless of the direction in which Palantir stock ultimately moves to. This flexibility is very valuable because it basically means that regardless of the direction, you would be able to make money. And it's important to note that options carry inherent risks, limited inherent risks. Basically, the premiums that you pay for the options, you have to be ready to let it go. This is one of the risks of playing the options, and frankly, that compared to potentially unlimited downsides or a much larger downside is still a reasonable price to pay in volatile situations. So because of its symbolic and size-related significance, investing in Palantir does come with its own opportunities and downsides, especially in this particular industry. There are different levels of consideration that may influence people's decision-making process. So one of the main reasons investors are drawn to Palantir is the growth potential, often positioned and considered by the market, and rightfully so in my opinion, as a leading player in the data analytics sector. Palantir operates in a field with immense promise for the future economy, as businesses increasingly rely on data-driven insights to inform decision-making and to drive innovations around. Palantir's and other companies are pretty well positioned to capitalize on that trend in particular, with its expertise in handling and analyzing large quantities of data. Palantir does stand to benefit from growing demand in that regard. Palantir's own financial stability is also another reassuring factor for investors. For many tech startups that operate at a loss, Palantir has already established a revenue-generating business model. This would reduce the likelihood of shares dilution through frequent fundraising efforts, so you don't have to worry about basically what happened with Mullen, M-U-L-N. I'm sure that many of you also know that company and have tried to make money with it, myself included, and we got badly burned. Okay, so basically you want to avoid companies like Mullen, the kind of stuff that are just hemorrhaging money and always come back to you and be like, I hereby kindly ask you for another financial contribution with massive dilutions. So I would say that additionally, Palantir has demonstrated its capacity to capitalize on trends. They have this ability to know where the public mood is. Of course, maybe I would argue from the data themselves, but there might be more than that. Like, they have a certain capacity to seize any existing momentums and to ride on them. So they have enhanced their visibility and appeal by getting into AI, and their ability to capture the market sentiment has kind of underscores like Palantir's potential for growth and success in the long run. Now, investing in Palantir is of course not without like its own risks. One potential concern is the possibility for legal contingencies regarding the privacy and data ownership. The companies that deal with sensitive information are eventually bound to have these kind of problems, and Palantir is no exception. It may face regulatory scrutinies or legal challenges in the years to come, which may, significantly impact its operations and brand power. Any sort of negative development in that area, frankly, could, I would say, significantly reduce people's positive sentiment and the company's financial performance in the eyes of investors. It's also a company that's a little bit too reliant on the public sector for many. The government contracts can be lucrative, that's for sure. They also entail a degree of uncertainty as they are subject to political and budgetary considerations. If government agencies decide to cut back on spending or shift their priorities, this may have a detrimental effect on Palantir's revenue and growth prospects. This concentration of revenue from a single source kind of exposes investors for additional risk and volatilities. Now, another potential downside for Palantir is the possibility of a shift in the market narrative away from data or AI. Just remember, it's not because a trend is currently popular that it's going to be popular forever, right? So going forward, we're also going to think about. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. All right, so having said all this, what is our opinion about Palantir? I would say that in the long run, if you want to buy Palantir, first of all, it should be for investment and not really for trading. There are better opportunities for trading up there. And also, absolutely do not go against it. Like, do not short sell this stock. I cannot guarantee how high it's gonna go, but I can almost guarantee that it's not one of those stocks that will just collapse for no reason. Or if there's any sort of reason, that we saw coming, we did not and we do not, right? With that being said, I would say that generally speaking, if you want to buy Palantir, it is for the long run, and it's also because you have the assumption that it's going to stay around for a pretty long period of time. That it's not something that's going to just go. It's not something that AI is here to stay, that data analytics is here to stay, and also that you're fairly optimistic about the US stock market, because not everyone is. I don't know if you guys have heard about the rumors that, oh yes, the dollar might be heading towards an imminent collapse. It's that sort of stuff. So it's really just food for thought. I would say that it's the kind I would recommend you to be vigilant, but also to maybe adopt the position that yes, things are murky, yes, things are uncertain, but at the same time, if we're looking for opportunities in this market, Palantir is one of those. So I would recommend to buy Palantir and to hold it for, up to 2 years, and to buy it over the course of 12 to 18 months. And to give maybe, the maximum capital should be somewhere around 8 to 10% of your portfolio.